losses to reach $1.4 trillion. The slump in Europe and Asia followed a huge sell-off on Wall Street, which saw the Dow Jones close down more than 500 points on Tuesday. Markets are down sharply today in London, France, and Germany. In Asia, Japan's stock market plummeted 9.4%, its biggest one-day drop in more than 2 decades. Markets in Australia, China, and Taiwan are among other fallers. And Iceland, which enjoys one of the highest standards of living in the world, is facing a near financial meltdown. The government has taken over the country's second biggest bank, fixed the exchange rate of its plummeting currency, and asked Russia for a massive loan as it tries to stop the collapse of its economy. Meanwhile, Russia, Indonesia, Ukraine, and Romania shut down their stock exchanges. In further signs the crisis is escalating, Britain unveiled plans today to inject up to £50 billion, close to $90 billion, into its biggest retail banks. This is British Prime Minister Gordon Brown.
Good, strong banks are essential for every family and for every business in the country. And extraordinary times call for the bold and far-reaching solutions that the Treasury has announced today.
In an effort to kickstart stalled money markets, the Bank of England will offer at least £200 billion in short-term lending. But recent efforts to bolster world credit markets have failed, to stern fears that the spreading financial crisis could lead to a global recession. We go now to Rome, Italy, where we're joined on the telephone by Loretta Napoleoni, an economist and author of Rogue Economics, Capitalismâs New Reality. Loretta Napoleoni, welcome to Democracy Now! Explain what's happening on the global front.
Well, thank you for inviting me back. Well, what's happening now is that the crisis, which started in the United States 3 weeks ago, is moving across the Atlantic and it's hitting the European market. The problem is that European banks are, to a certain extent, linked to American banks, but also they started to play the market using derivatives, but also mortgage-backed securities themselves. So what is happening is that in their portfolio at the moment, there is an increasing toxic assets as in the United States and very, very little liquidity. So the banks need money and governments are intervening to tap liquidity into the financial market. Exactly the same thing that has happened in the U.S.
Let's start with Britain. What is happening there? What does it mean that they are part nationalizing their banks?
Well, a year ago, Great Britain nationalized Northern Rock, the first bank that was really in serious financial situation. And what they're doing at the moment, they are nationalizing part of banks which are in need of immediate financial help. So the ownership of between 40 to 50% of these banks is passing on to the Treasury. So the people, basically, the population of the United Kingdom, the taxpayer, is going to be the owner of these shares. In exchange of that, the government is pumping money into these banks. But, it's a dangerous route because, of course, the taxpayers cannot cover the entire debt of the United Kingdom banking system. So this is why Gordon Brown has called an emergency meeting for next Tuesday, where all the European governments representatives, but also I think the United States will attend in order to find a solution to what looks like a general banking meltdown.
Iceland. It's not only about banks going down. This is about entire country, one of the highest standards of living in the world, the entire country in financial ruin.
Well, this is the danger. The danger is that if governments step in and nationalize banks and take on the entire debt of these banks, eventually this debt is going to be bigger than the GDP of the country, but also bigger than the amount of money that this country can attract in order to cover the debt. This is what is happening in Iceland. Iceland yesterday issued an emergency call to to the European countries. Now, let's not forget that Iceland is part of Europe, and they actually use the euro as their currency. So they issued this emergency call asking for funds, asking for help, and the only country that lent money to Iceland, $3 billion, was Russia. So today, this morning, they suspended banking operation in Iceland, in order to find a solution to what looks like the impossibility of the government to cover the entire debt of the three largest banks in Iceland.
And let's talk about Germany, Switzerland, France, Egypt. The Dow declining for a consecutive day here. Japanese markets fell more than 9%. All over Asia.
Yes, I mean, you see, the crisis, this is like a sort of shock wave. It starts in New York and Wall Street, and now it's moving across the world because banks have links with each other. So some banks in Europe, some banks in Japan or in China had assets which were, toxic assets coming either from Wall Street or from other, from the city of London, from Frankfurt, from wherever, there were these toxic assets. So what is happening is that banks are trying to rescue, first of all, their own banks. So we see in Germany that the German government has intervened for the last week and a half, massively on the market. He saved the Hypo Bank, which was the largest bank, which gave mortgages in Germany. And what the German government has been trying to do in the last 3 or 4 days was to avoid a concerted effort of the Europeans to save European banks. Because, of course, Germany is the country which has most assets. It's actually the country that has cash, and it doesn't want to use this cash to save French banks or Italian banks. But you see, if Iceland will come under serious stress in the next few days, the European will have to save Iceland, because you can't have a European country, you can't have a country which is inside the euro going bankrupt without having tremendously negative effects inside the euro area. Now, countries like Japan are also in very serious troubles. And let's not forget that Japan just came out in the last 6 months from a recession similar to the one we're going in, which lasted for 10 years. So its economy is particularly weak. And then finally, also China cut the interest rate today for the second time in 2 weeks. But you see, the Chinese government, the Japanese government, to a certain extent, have a much bigger margin of maneuver, because their exposure to these toxic assets is much lower than the exposure of the Europeans. The Europeans are the one which are, to a certain extent, even in a worse situation than the American banks, because the American banks have had rescue packages, because the U.S. has moved quickly in order to prevent the crisis and also to manage the crisis. The Europeans can't agree on what to do, and this is highly, highly negative for the market.
Is the world entering a global recession?
Oh, yes, we are in a global recession. The industrial index in the United States in the month of September fell 43%. Now, that is an indication. But also, I tell you, there is another indicator which is very important, and we should look at that, is the commercial paper. Yesterday, the Federal Reserve intervened on the market and decided to take on commercial papers. Now, commercial papers is what big companies use in order to cover short-term operation which are related to the production of whatever they produce. So this is where the industry basically borrows money from banks. Now, this commercial paper market literally froze in the last week. So big corporations, car makers, people that actually operate on the industrial level could not get cash, could not get money in order to run the everyday business. So this is why the Fed intervened. So now what the Fed is doing is acting as a clearinghouse between banks and the industry. Banks put money in the Fed, and the Fed use this money to discount commercial papers coming from the industry. Now that is an indication that we are going really into deep recession, because the moment in which the industry can't get cash moved, this is the moment in which they will stop producing. The same phenomenon is happening in Europe. I mean, we have a drastic drop in production, and we are already seeing people being laid off. So we'll have an increase in unemployment in European countries where unemployment is already very high.
Loretta Napoleoni, I want to thank